We'll give everybody 1 minute. My clock just went to 12:59. We'll give everybody 1 minute to join. Yeah, we already have some folks. There we go.
Ooh, look at the numbers go up. Look what you've done, Richard. They're all here to see you. You're on mute.
I'm flattered, but is everyone listening to us?
Yeah.
Everyone's listening to us.
Okay.
Everyone's listening. We can continue our conversation about Bruce Springsteen and Elvis Costello if you want, but
I think in many ways they were kind of flip sides of the same coin, different sides of the Atlantic, maybe in some ways. You know, angry, working class, very obviously talented, rebellious, you know, same time period origins.
Yeah. And
had long careers that evolved over decades. This is a good way to start an aeronautics webinar, isn't it?
I think so. I think so. Well, I'll tell you what, it's 1 o'clock, so why don't we get started, all right? Hi, welcome to the Great Aero Recovery, a webinar featuring Richard Aboulafia. I'm Greg Principato, President and CEO of the National Aeronautic Association.
And I'm Amy Spowert, President and CEO of the National Aviation Hall of Fame. This is the 11th in a series of webinars being brought to you by a collaboration between the National Aviation Hall of Fame and the National Aeronautic Association. We launched this series in 2020 to showcase the innovative spirit and resilience of the aviation industry during the pandemic. To learn more about our organizations, please visit our websites. Members of the Hall of Fame and the NAA received advance notice of today's webinar and were able to sign up early. You all should just join. Just join, one or both or all of them, please. Thank you.
If you get the right kind of membership, you can get 2 for 1. We're grateful to our sponsors for the 2022 webinar series. And you see them up there on the screen: Aerojet Rocketdyne, Boeing, Flight Safety International, the National Air Traffic Controllers Association, Raytheon Technologies, and Safran USA. This has been a tumultuous couple of years for the aerospace industry. Even before COVID, a number of challenges had arisen. Then a once-in-a-century pandemic, now war, inflation, higher energy prices. There are few better equipped to help us sort all this out than Richard Aboulafia. Pre-COVID, Richard made this presentation before the annual NAA lunch and entitled it his State of the Aerospace Union. We also, by the way, and part of the tradition was Richard and I would each have a beer. I have my favorite Belgian lady right here. This time, Richard is part of the NAA National Aviation Hall of Fame series, which reaches an even larger audience. This will be a little different format from the previous National Aeronautic Association National Aviation Hall of Fame webinars, but I assure you it will leave you better informed and even entertained.
Richard is Managing Director of Aerodynamic Advisory, where he analyzes broad aerospace industry trends, advising aerospace companies and financial institutions all over the world. Prior to joining Aerodynamic, he was Vice President of Analysis at the Teal Group, where in addition to his consulting and analysis role, he wrote and edited the Teal's Group World Military and Civil Aircraft Briefing. He's a frequent media commentator on aerospace issues and has regular must-read columns in Aviation Week and Space Technology and Forbes.com. As Richard makes his presentation, please feel free to share your questions in the chat box. Once he's done, Greg and I will do everything we can to ensure they get answered. Richard, it's all you.
Thanks very much, Amy, and thanks very much, Greg. It's great to be back. I think I've lost track of how many of these we've done. Coming up on 10, right? Something like that.
Something like that, yeah.
I mean, you know, come on, it's time for a gold watch, don't you think? But flattered to be back, really honored. And yeah, boy, it's been a weird, as Greg says, it's been a super extra weird couple of years now. And as of last week, it just got even weirder still. You know, the only consolation I think I've had in my mind as we've entered the recovery phase of this crisis has been It feels a lot better to climb out of a pit than it does to fall off a cliff into a pit. And I think we're very definitely in the climbing out of a pit phase here. Let's turn to that, Greg. But boy, none of us have ever seen anything like this. Stephanie, if I could ask you to turn to the next page, please. Thank you. First of all, a little review of all the segments in my coverage universe there. And I think I'll update this now while we've got it up with some preliminary thoughts about the terrible set of events in Ukraine. First of all, going back 2 years when this all started, I sat down with colleagues and peers, and the guy who gets the award for wow, most resonant comment ever was most senior person that I know in the business, Kai von Rumer over at Cowen. And his comment was, well, I thought I'd lived long enough to see just about everything, but apparently I had not. But anyway, I sat down with my colleagues, sort of did a bit of triage in these segments and where they were heading. And what really hits me is 2 years on, for most of these, it's actually been better than we feared by a considerable margin. The one thing we thought would be hit the most absolutely has been twin aisle jets. Absolutely. Just that bad. And that's because, of course, international traffic hit hardest and longest. There was already an overcapacity situation, as you'll see in a moment in my charts. And not only that, airline fleet planners have already been, well, showing a secular shift away from twin aisles and towards single aisles, even for international routes across the Atlantic, intra-Asia, Middle East, Europe, and wherever else. So it's just that bad. We thought single aisle jets would get hit almost as bad as twin aisle jets, and there we were wrong. Boy, this is a market that has come roaring back, and of all the questions we get from clients, investors, whoever, most of them these days seem to concern production constraints for making the ramp. That's a remarkable improvement over the rather apocalyptic feeling we all had a couple of years ago. That's good news. So let's amend these two jetliner segments. What's going on in Ukraine now? International traffic's going to get hit even longer. The Ukraine crisis is, I don't want to say another nail in the twin aisle coffin, but it doesn't do that recovery any good. Whereas I don't think it impacts single aisle jets at all. As a matter of fact, it might help them because it's very obvious that because of this crisis, we are in for an extended period of rather expensive fuel. And if you're serving a domestic commodity route with a last generation jetliner and your competitor has a new generation Neo or Max, you're toast. You might as well consider a different line of work like children's candy or something. So I think you're going to see, if anything, a bit of a headlong rush towards the current generation or the new generation of jetliners. So twin aisles went in weak. They just got weaker. Single aisles went into the Ukraine crisis strong. They just got stronger. Business jets, 2 years looking back, we thought that would be a disaster. And for a little while it was. And boy, I have never seen such a pivot. All the indicators for business jet demand have been off the charts for the past 6 or 8 months. I am a little concerned about what the end of the Russia market, hopefully temporary end of the Russia market, means for it, because that is a chunk of big cabin demand. I suspect it's going to take some of the upward pressure off in terms of orders, in terms of pricing, in terms of availability, but it's not going to be disastrous. I still think the business jet market in a couple months' time, and hopefully through the year, in the next couple of years, is going to be much stronger than we ever feared, looking back at the start of this crisis. Civil rotary, it's complicated because, frankly, people had been underinvesting in civil rotorcraft for some time. So high gas and oil prices probably aren't going to change that a lot, but that market's proven to be pretty resilient. And then finally, there's the enormous bucket known as military programs. And we thought, look back a couple of years, a lot of people were concerned about defense budgets, pressure on defense spending because of well, the debt associated with the pandemic because of sluggish GDP, none of that has come to pass. All defense programs have proven extremely strong. Pretty much every national defense budget has proven to be extremely resilient. The only one that I think the only country that cut their defense spending for about 5 minutes was South Korea, and they immediately came roaring back. What does the crisis in Ukraine do? It makes this even stronger still. Again, the one theme here, I think for both crises is if you went in weak, you got weaker. If you went in strong, you got stronger. And military programs, boy, I can't think of a single dog among them. Pretty much everything, I think, is going to get the funding they expect, and quite a lot of upside potential too, because of the geopolitical drivers. Next page, please, Stephanie. A little output map of where we've been over the past couple of decades, and you can see what happened over the last 2 years. That was unpleasant. We had, well, the complete erasure of all black ink. That's not good. Replacing it with red. And in aggregate, the industry dropped by 28% in terms of output, even worse in aftermarket and all the other indicators between 2019 and 2021. The only thing I can say for a lot of these segments is that the downturn was primarily due to logistical disruptions, factory closures, people unable to travel to take delivery of their planes, and of course, supply chain problems too. You know, the combat aircraft market, for example, or the military rotorcraft market, those aren't weak markets. They've simply been disrupted by the pandemic. However, jetliners, yes, they were hit. They're coming back to different degrees, as you'll see in a moment. I'm going to focus a lot of my comments in this presentation on the jetliner segment because that's where a lot of the organic damage, if you will, really took place, with twin aisles falling 60% and single aisles falling by a third. Next page, please. So looking at jetliners, you know, we had a strange situation going into this. There had always been the dismally predictable pattern of 7 good years, 3 bad years, almost biblical. And then all of a sudden, starting in 2004, we had a 14-year super cycle. The party just kept going. 2019, you can see a dip. That was purely because of the 737 MAX production stop. Everything else was fine. The market was fine in 2019 for the most part. Anyway, then 2020 happened. And look at that. We were knocked back down to 2006, the worst bust we've ever seen, the worst market bust we've ever seen. This, of course, is the, you know, the chart I spent most of 2020 dreading presenting, and sure enough, it was just that bad. You can see 2021 was just a tiny, tiny bit better, again, driven by the return to 737 MAX deliveries. Grim, grim, grim. Next page, please. Now, what's going to drive the recovery? What drives the jetliner market? 3 factors drive it. First and foremost, of course, is traffic, the most organic driver behind jetliner demand. And my colleagues at Aerodynamic have done an awful lot of work on the shape of the recovery and the impact of the COVID-19 pandemic. And this chart kind of distills their thinking and my humble contribution to it. Looking back historically, that, you know, according to IATA, there was a 66% drop in revenue passenger kilometers in 2020. That doesn't resemble anything in the history of this business. You go back to the World War II, dawn of the jet age, whatever you like, the worst year we had ever seen in terms of year-over-year traffic drops was 3.3%. And I think that was the Great Recession. It might have been 2001. They were about the same. 1991 wasn't a pleasant year either. 1973 wasn't a pleasant year, but they were all to the tune of a 2 or 3% drop, not a 66% drop. And it really seemed like, I think it was Paul Krugman in the New York Times, who said, well, the economy has entered a medically induced coma, and so had our industry, right? Now, look at the pattern, all the cues you've got. Obviously, we've had, well, it's been an uneven recovery, but at least the trajectory is kind of consistent. You know, back when we all thought we could somehow envisaged a recovery that looked like a V or a U or a Nike swoosh or an incumbent Dell or recumbent Dell or whatever else. I don't think anyone ever said, yeah, but those are all smooth, and it's not going to be smooth. They're going to be choppy, disrupted by variants, Omicron, Delta, whatever new Greek letter we'd rather not be introduced to. It's going to be choppy, and it has been choppy. The good news, though, is that so far, none of them have been more than a little modest fishhook in that recovery process. And we're very much on course for a revenue passenger kilometer recovery to the peak, the 2019 travel peak in 2023. That's the good news. The bad news is, and again, kudos to my colleagues at Aerodynamic, our best estimate is that even by the middle of the decade, as you can see on the right, there is still an 11% impairment relative to where we would have been. No recovery can make up for, well, the damage inflicted by a 66% one-year traffic downturn. It just doesn't work like that. So we'll be paying for that in our forecast for years to come, even if the recovery kicks in within the next 18 months, which I personally believe, and the Aerodynamic believes too. Next page, please. The second factor, looking at major drivers behind the jetliner industry, is the relationship between the cost of capital and the cost of fuel. It's neither of them are meaningful indicators. What really matters is the gap between those two. What you want is a world where fuel costs a lot, not too much, and airlines therefore have every reason to bring in a new jetliner and replace an older, thirstier one. And they have the cheap cash with which to finance new purchases. One of the great unsung heroes of this pandemic crisis has been, frankly, well, the money people, the lessors and financiers who kept financing jet transactions and allowed airlines to play the long game, to say, we don't need a new jet now, but in a couple of years we will, and we're getting good terms right now, and we've got our spot in the production process, so let's take that, and we've got financing for it too. Financing has stayed intact, and the amount of third-party finance amped up to, well, way above 50% of the market, closer to 60%. That was a very welcome feature of the landscape. So where are we now with these two indicators? Well, good news, cash is still super cheap. There are inflation hawks out there, and I'll have more about inflation in just a moment. There are good reasons to be concerned about interest rates, but hey, guidance for 2022 in terms of the wholesale rate, the federal fund effective rate, is still, the couple percent zone, not the kind of ruinous 5, 6, 8, 10%. Go back to the late Carter, early Reagan years, and those of us old enough remember those days. Nothing like that. I think there are probably inflation hawks who are concerned, probably for good reason. But the base case scenario right now is that cash stays cheap. Fuel, that's another story. In an ideal world, you want fuel to be in that Goldilocks range where it's more than 55, but less than 90, something like that. 50 to 85 I've got up there. As long as it's not cheap, because again, those great old DC-9s look real good when fuel is $22 a barrel, as we found out 18, 20 years ago. But you also don't want it too expensive. If it's above 100, well, that makes it very hard for the airlines to balance that equation of, profitability and getting people to fly. And there's not much they can do with new fuel efficient equipment if it's $130 a barrel for fuel, not much. So where's fuel going? Well, as you know, no one can agree, because if they did, they would play the futures market and get incredibly rich and stop doing presentations. The Energy Information Agency is still telling us something in the high 70s. That's probably not true. Not with the Russia crisis, not with the Ukraine crisis. Most likely it's going to be in the 100 zone. I'm concerned, not ridiculously concerned, but somewhat concerned. We'll just have to see. So anyway, conclusion about the second driver behind jetliner demand, not bad, but watch this space, because this is going to be a key area that's going to be affected by this crisis right now. Third page, or third driver, next page, please there, Stephanie. Thank you. The third driver has been China, and here the news is not great. Whenever we've had a conversation about single aisle production rates for the past couple of decades, we've really been having a conversation about China's ability to take more jets. For comparison purposes, I took the China numbers for global jetliner output here and compared to them with the other BRICS, Brazil, Russia, India. And this has been a show about China. By the way, I should mention, Russia never amounted to much, so people ask, oh, wow, what does that mean that Russia can no longer buy Western jets? It's 2% of the market, 1%, 2%. It really doesn't matter. What does matter is China, enormously. China's role in this crisis matters, but China's broader economic outlook and geopolitical posture matters enormously. Because as you can see, in about 20 years, they went from 2% of the world market to a peak of 23% of the world market. And as you can see also, the problem with China is, well, their problems predated the pandemic. There was an aviation market slowdown in China in 2019 that had nothing to do with the pandemic. The pandemic, as you can see, made it worse. But air travel demand in 2018 was 12.2% in the fourth quarter. By the end of 2019, it was 5.3%. That's disastrous. And we don't know what happened. You know, the most likely explanation isn't that their economy collapsed or anything. The most likely explanation is that the government wants, frankly, a return to communism. It wants a return to not having wealthy people around consuming stuff. It wants a return to state-owned enterprise. All of this is very bad. And that's why I think this is going to be a fascinating moment, putting on the geopolitical hat for a moment. Are they going to look at what Russia is doing and saying, yeah, this is the way forward. We want to join with Russia. We want to be part of our own ecosystem, aviation ecosystem, economic ecosystem, political ecosystem? Or are they going to say, this is bad. We might have our disagreements with the West, but no, we're not going to ally with these goons in Moscow. And so far, they're kind of on the fence, but there are some hopeful signs. In an ideal world, frankly, they would use this moment to say, okay, we've seen the future and it's not that. We might have trade issues with the West. We might have security issues in the Western Pacific with the West, but ultimately our future is to be economically integrated up to and including the jetliner industry with the West. We'll see. And again, an awful lot depends on how China behaves over the next year in terms of our jetliner market comeback. Next page, please. So good news, book-to-bill is a thing. 2020, for the first time in aviation market history, book-to-bill was not a thing. It was not measurable. That is to say, you had more cancellations than orders, and you couldn't calculate the ratio of those negative orders to deliveries. Well, in 2021, not only was that ratio calculable, it was above 1.0, slightly. It had its nose above water, slightly more than 1.0. That was a welcome development. I'll take it. And again, I think it's more than just confidence in the traffic recovery. It's also fear of high fuel prices as driving people, airlines, to get in line for the new generation of single aisle jets. Next page, please. So what's our expectation moving forward for jetliners? You know, economists say that everywhere these days you can see a K-shaped pattern if you look hard enough. That is to say, you can see a bifurcation between two formerly parallel indicators that are now diverging. And single aisles and twin aisles, well, this is a classic K-shaped pattern. There at the bottom, we've got regionals. They never seem to go anywhere. Twin aisles, look at the green line. You had this massive period of overbuilding during the last decade, as I'd mentioned. And now I think we're in for a very prolonged slump, and we don't have them getting back to the peak until after our forecast period. That could change, but right now, that secular shift in fleet planning away from twins and towards singles is doing wonders. And look at that single aisle line. We have that getting back to peak within a year, and then to newer and greater heights. So again, you think about the constraints in the production system and the supply chain, it's all about single aisle jets, just hugely important. Does Airbus get to rate 60 more or less as planned? Yeah, probably. Boeing right now, rate 31 is planned this year. Yeah, they'll get there, and probably after that, something resembling rate 50. Does Airbus get to rate 70? Yeah, I think in a couple of years, they quite possibly do if the supply chain allows. Twin aisles, however, not so much. Next page, please. Now, looking at the competitive landscape between Airbus and Boeing, you can see that Boeing's taken a bit of a hit over the past couple of years. You've got two different metrics for Boeing here, light blue and dark blue. Why is that? Well, that's because you've got ASC 606 accounting provisions, which Boeing has to provide. They do provide, to their credit. Airbus does not have to provide them, and they adjust backlog for risk, customer risk. So we've provided both. And as you can see, either way, Boeing's taking a bit of a hit. And it's not hard to see why. Next page, please. These are all the segments of the jetliner industry. Look at the middle one, 200-seat single aisles. That is enormously important, because when we talk about a secular shift in fleet planning away from twins and toward singles, that means that the biggest, most capable single aisle is going to benefit. And that right now is the A321neo, LR, XLR soon within a year or two. And if you look at the chart on the right, 321neo orders, they're really gathering momentum. So the order book is now 4,100, backlog 3,500. Boeing, it's hard to tell with the MAX 10, but it doesn't appear to be more than about a seventh of what Airbus has. Boeing appears to be at a severe competitive disadvantage. People say, hey, is this about the MAX? It's not about the MAX. The MAX is a good jet. It's had big issues, of course, but it is a good product. If you look at the MAX 8, that's that 150-seat single aisle. It's doing just fine against the A320neo. We expect more orders too this year, probably quite a few. But in that very important single aisle 200 to 250 seat space, Airbus has an enormous competitive advantage with the 321neo. Next page, please. Which raises the question, what does Boeing do next? Enormously important. And my view is we should give them another year because they've obviously faced unprecedented challenges. But the past couple of years are not encouraging. If you look at their spending on new product development, independent research and development at Boeing Commercial, both as a percentage of BCA sales and as an absolute, the past couple of years have been disasters. Their spending on engineering and design fell by 30% in 2020 and another 20% in 2021. I have been told by Boeing people that this number will stabilize and maybe even rise this year. And I sure hope that's the case, because frankly, if they don't do something, Airbus is going to get to the #1 spot or stay in the #1 spot and stay there for a long time because of the importance of the A321neo. Next page, please. You can see that here. What we've done is divided numbers moving forward for Airbus. Blue is everything Airbus except the 321neo. Green is the 321neo. Effectively, the 321neo becomes the wedge that allows Airbus to get to 60%, maybe even 65%, unless Boeing does something. Right now, we assume that if Boeing does something, it arrives after the turn of the decade. I think they need to do something way before then. I think they need to launch something no later than next year and have it in service, say 27, 28. Will they do the right thing? This is the biggest question facing this industry, the US part of the world aviation industry, and arguably the entire world aviation industry. This is the biggest single question that we face. Next page, please. Now, one thing to think about as we execute on this production ramp is the role of inflation. Because normally in the history of jetliner market recoveries, and I've seen a few over my 33 or 34 years in the business, normally we lead the way, right? I mean, normally we're the ones who are like, okay, aviation, it's back, and now everyone else follow us. That's not the case. The US government has this wonderful set of data, courtesy of the Federal Reserve Economic Data people, which is designed for people like me. It's the perfect set of data. If you look at that top chart, that data set says manufacturers' new orders, non-defense capital goods excluding aircraft. I call this the non-Richard chart. Everything that Richard doesn't cover is in this chart. I deeply appreciate my government doing that for me. But look what happened to that chart. It's fascinating looking at the outside world of lawn furniture, tabletop, tennis boards or whatever, refrigerators, televisions, everything, cars. Look at that. It is a massive line up. In other words, first time ever, we are trailing. We, the jetliner industry, are trailing. That means, of course, we're last to hire, we're last to buy stuff, we're last to invest in machine tools. And that means we're going to get hit with inflation because everyone else got there first. And what further complicates this relative to the last recovery and the recovery before that also is that this time we had seriously high defense spending, especially defense R&D, which means a lot of really good workers, both engineers and machinists, are being poached by the military side of the industry. That's good from a national security perspective to have good people. It's really bad from a jetliner inflation standpoint. Now, there is some coverage in Boeing's contracts, for example, that allow for inflation, so they're a little bit protected. Are their suppliers protected? No, not always. That's a major concern for the business. Is Airbus always protected? No, not always. Are their suppliers protected? No, generally not. So I think a lot of the jetliner supply chain and indeed the primes are potentially vulnerable to this inflationary dynamic. Next page, please. And speaking of defense, good news, the investment accounts in this downturn are a lot higher than in the last downturn. The investment accounts are the bottom two lines, procurement and RDT&E. RDT&E is at an all-time record level, as you might expect, given the challenges of returning to, well, dealing with peer adversaries like China. This has been a China question for the past couple of years. It is now suddenly a Russia question. Hooray. That isn't good. In other words, there's probably even more upward pressure on the RDT&E accounts. Ditto for procurement. And you look at it compared to the last downturn, fiscal year 01-02, procurement spending was in the mid-50s at the time. It's now in the 140s. This is a fairly conservative outlook. I think as a consequence of what is going on in Eastern Europe right now, this will probably be heading above 150. Ditto for that top line, operations and maintenance. You could easily see that staying above 310, 320, 330, depending upon, of course, force deployments. Expect to see large supplemental defense spending packages for that sort of thing. Now, good news for the industry, great news for the industry, except for that inflationary dynamic that's going to hit people in the supply chain and even at the prime level in the jetliner business. Next page, please. Now, let's look at tactical aircraft procurement. 22, as you can see here, is a little lower than you might have expected. But we haven't watched that budgetary process fully play out. Probably will be a little higher when everything gets allocated. But one thing you notice compared to the great years of the Reagan defense buildup is this massive disconnect between funding and units. And that, of course, is a function of aircraft getting more expensive. So the peak year of the Reagan buildup, FY86, saw about $13 billion spent in today's money on 387 tactical combat planes. Today, you had a peak of more than that last year, 21, closer to 14 billion, and it purchased about 120 something planes. We face a major challenge in the US, and I think this is true for all countries in the Western Alliance. Basically, what do we do? Because we have this enormous legacy force, it's not being replaced, it's getting old. So you've got basically three choices. One, you spend even more. Two, you spend more on sustainment and upgrades for the existing legacy fleet. Or number three, you cut force structure. I'm here to tell you, that because of this rather terrible set of events in the world today, no one's cutting force structure. It's not happening. So it comes down to even more money for defense or more money for upgrades, probably a combination for both. Again, combat aircraft, great market. Next page, please. Now, looking at the sort of granulars of the global combat aircraft market, boy, it's heading straight up. We're probably being conservative here. We need to revisit all of our forecasts as a consequence of the events in Ukraine. But right now we have numbers ramping up to way above 40 billion worldwide. One of the bigger mysteries is that last year, DoD said that F-35 output would be capped at 156 per year for an indeterminate period of time. That's a mystery because in terms of demand, it should be way over 180. As a consequence of what's going on, it's probably going to head to 200. So how quickly is that ceiling lifted? I don't know. I really don't know. It's obviously a function of DoD waiting for the F-35 to mature a bit, maybe Block 4 to kick in and get aircraft that don't need to be heavily modified. Some of it might be supply chain constraints. Some of it might be the challenge of replacing Turkish suppliers, who of course were kicked out of the program along with Turkey. It's a whole host of things. But it's one of the bigger questions on the military side of the house is how quickly can that F-35 production brake be lifted? Because again, I really think the number that the market needs probably for most of this decade is going to be in the 180 to 190 range. Yesterday, Germany came out and said it would probably buy F-35s. Germany. So that's sort of the most, I always say that Vladimir Putin is arguably the best F-35 salesman of all time. Next page, please. Now, looking at the US fixed wing aircraft industry output, yeah, it's getting pretty, even with that 156 cap, that red segment kind of dominates the industry, but the stuff on the bottom, that is to say, all the legacy planes, they're not going away. The F-15 will be with us for the decade. The F-A-18 we have expiring in a few years, but it might survive depending. The F-16, oh, that's good for another decade and a half easily. And then at the top, T-7 coming on and B-21 coming on even faster. I suspect that the B-21 is going to be probably the best funded, most secure new aircraft program in the world, just because of the geopolitical drivers and the need to replace what's out there. At least 150, I'd have to give that for my number for ultimate procurement, maybe 175. One big question, NGAD, we know it's flying in prototype form. When does it mature to a procurement program? Our forecast says safely just after this, 2032, somewhere around there, maybe, some low rate initial production aircraft in the 2029, 2030, 2031 range, but it'll start to impact the market, no question. And that's why we've got a bit of a downward dip in F-35 in the last couple of years. But nevertheless, NGAD is going to be a major driver moving forward. And that's something you think about if you're a supplier. Next page, please. Europe's a different story. Again, we're going to have to revisit these numbers in light of what's going on in Ukraine. But basically, Europe is kind of like the US legacy programs, except they don't have an F-35. The big question, of course, is SCAF and Tempest. We think both those programs will happen, but they're not going to see metal cut or composite drilled until the 2038, 2040 range, maybe accelerated a little bit because of current events. But anyway, that'll be what really transforms this situation. Next page, please. Okay, summarize in my last couple minutes. So it's January 2020, and I have the pleasure of addressing NAA back then, and I'm presenting that blue line. You can see the MAX shut down, little dip there, and then we fell into a pit. That's that dark blue line. That's reality. The light blue line was what I was expecting in January 2020, and the dark blue line is the reality that we have fallen into. The military line's green below. It was always pretty high. It's gotten a little higher, but nothing like the challenges we're facing in the civil market. You can see we're climbing out of that pit. unpleasant, but at least we're climbing out. Next page, please. Now, this is the National Aeronautic Association, so I like to present this chart every year. How's the US doing? Well, both in terms of total output, that's the blue bars, and in terms of percent of world, not great, to be honest. A lot of the problem, of course, was the 737 MAX, and in 2020, that knocked the percentage down of the US industry as a function of the world to about 45%. Last year, it recovered again, driven by the MAX to 48%. We think it'll get back to the 55% it had been historically for decades before that. But obviously, a lot depends in the long run on what Boeing does. Does Boeing do the right thing? Again, very big question. Another big question, of course, is that F-35 production cap. Does it get lifted? Because frankly, you could easily see the US getting back to a much higher percentage of the world fighter market if it sells more F-35s. Next page, please. One comment about the market, I always like to show this chart because it shows, I cover about 150 programs out there. I probably shouldn't, right? Because the top 20 kind of drive the show. The top 20 are 77% of output. The top 5 are 55%. And these days, the A320 family kind of casts shade on just about everybody else. So if you're a supplier in this business, and I suspect many of you are, focus your business development resources accordingly. Next page, please. Final chart, where we are in recovery road. What I did here is I took all the segments we cover and benchmarked them to their peak in either 2019 or 2018. First of all, look at the very top line, that tan line. That is world GDP. It has recovered. The world has moved on. World economies are in pretty darn good shape. So is the US economy. World revenue passenger kilometers, traffic. You can see that dashed line, dashed maroon line. And again, that gets back to the peak in 2023. Everything else, military programs, single aisle jets, business jets, they get back to the peak either this year or next year. The only notable exception, look to the bottom there, twin aisle jets. So to return to the theme I began this presentation on, we have nothing to fear but twin aisle jets. That is the only segment of the industry, as I follow it, that I'm really concerned about moving forward. It'll be back, but it's going to take a long time. There are a lot of headwinds, a lot of risks. And with that, I can't thank you enough for listening to me. I'm going to turn back over to my hosts to manage questions. Greg and Amy.
Thanks, Richard.
Thank
That was that was really insightful. I think there are a lot of things that I found slightly amusing, like comparing world civil transport deliveries to the Bible. I thought that was particularly good. Another key phrase I'm going to take away is climbing out of the pit. And I'm going to take that as a really good sign. So my first question to you is going to be just a general, what do you envision the next 18 months to look like? What are the risks that we're going to see? And what's the really good news about the next 18 months?
Yeah, obviously the big risk, of course, it's foremost in all of our minds. What is the economic impact associated with the crisis in Ukraine? And that impacts things on so many different levels, obviously, in terms of the traffic slowdown that could result from this conflict, to disruptions in titanium shipments. Tom Friedman used to, I don't want to miscredit him, but Tom Friedman used to say that Russia was basically a gas station with nukes. It's a little more complicated. It's a gas station with nukes, but they also have a titanium mill and it supplies a lot of our industry's titanium. So if you have the walls going up in a protracted period of, shall we say, warm war, cold peace, whatever you want to call it, something in that gray zone that cuts off shipments of everything between Russia and everybody else, that's going to be a real spanner in the works. That's not good at all. What else could happen? Well, the inflation hawks could be right, and interest rates could gallop upwards, and affording new jetliner transactions could become very difficult. That's a major area of concern. Fuel, everyone has hedges for I don't know, or a lot of people have some degree of hedging for 6 months or whatever. But if we're in for an extended period of 130-ish or 120-ish or even 110, or, whatever number you like, that's scary. And there's been inadequate, it turns out that there's been inadequate investments in fossil fuel resources for whatever reason, you could see major challenges to airline pricing and demand and profitability. That's another big area of concern. Probably the biggest area of concern, frankly, is just, this becomes a macro problem with Russia and China getting together, creating their own ecosystem, not just in the aviation business, but geopolitically. And world growth slows markedly as a consequence of deglobalization. There's so many things to think about right now at this moment. But, from our industry standpoint, I would put it down, I would, concentrate it on supply chain concerns focused on titanium and traffic slowdown as a consequence of the war. Those are the two biggest.
Hey, Richard, first of all, I think it was Dean Acheson or somebody said, yeah, the Soviet Union back in the day was like the Ivory Coast with nukes or something like that, or something. Yeah, so there are all kinds of takeoffs on that.
Right.
And nothing to fear, but the Twin Isles themselves, that's, I think I'm going to write that down as a lover of presidential history. So your comment about the leasing companies being the savior, right? I've always been amazed at ever since I got involved in aviation, at the impact that they have, and really they're, many of the largest owners of these jets, right? But you still need cash. You still need cash to finance. The airlines want to renew their fleet. They still need cash. And Philip Adrian asked a good question here in the Q&A, and I'll just go to it exactly the way he asked it. With cash being preserved at the airlines, how will those that need fleet renewal to stay competitive finance it? Seems they're in a bind with higher cost, lower margins, needing more access to cash, obviously with fuel costs going up. And it certainly seems like the aviation labor unions are interested in getting raises and so forth too. So the airlines will have a challenge, right? How will they finance it?
Yeah, it's a great question. Are they themselves in an inflationary bind as a consequence of higher labor rates and whatever else? Absolutely. I would just, once again, put this under the heading of, you went into this crisis strong, you got stronger. If you went in, you got weaker. If you went in weak, you got weaker. And that's so true in terms of access to capital. If you went into this crisis as a strong airline, I don't know, Southwest or Air France, KLM, or anyone you might think is in pretty good shape as a global player, then accessing capital for jetliner purchases really isn't a major challenge. People will invest in you. Delta, people will say, oh, you want to buy a jet? We believe you'll be able to pay this off. You're not going away. We believe in you. Here's your money. We're playing the long game. The jetliner financier crowd is, they're geared to make money over decades, not 16 months or whatever. And then if you went in weak, if you were Norwegian or AirAsia or someone like that, you had weak capital positions, you didn't have a home government that supported you, you weren't domiciled in one place that was willing to provide that money, then the third-party finance people might just say, okay, your terms of capital are very, very different. So it really comes down to who you are. But if you were able to make a compelling case to the financiers, then there's really not a problem right now, because frankly, there's an awful lot of cash looking for a home out there. And, we talk about inflation, there's, believe it or not, an upside, because a lot of the finance crowd view jetliners as kind of the sort of durable good they're supposed to be investing in as a hedge against inflation. So they're looking to do business with you. They simply want to feel good about your prospects. People ask what resulted in the Frontier Spirit merger. I would argue that probably exactly that, just the ability to say, hey, together we're going to be stronger. We deserve access to capital at a competitive rate. Please, let's make this happen. And I expect you'll see a bit more of that moving forward.
Richard, we're getting a lot of questions about sustainability and sustainability issues in this. Clearly, that's a big concern. I know Philip has a great question on here about being net zero carbon by emissions in 2020. I wanted to kind of address some of these, because Scott and Andrew also had great questions about advanced technologies in aviation. What are your thoughts on hydrofuel and electric aircraft, and what effect will that technology have on the regional forecast that you gave?
Well, to be honest, it's a little tough to be optimistic. I mean, I think we all welcome experimentation in the space. The problem with regionals, of course, is that there are still major structural challenges to the industry, even if you were to, provide an ESG catalyst. In other words, you look at the electric or hydrogen planes that have been proposed, especially the electric ones, they're in like the 9 to 19 seat class. No one builds planes like that anymore because, frankly, all the other costs associated with operating small planes, whether it's crew costs or slot costs or taxes or whatever, just make operating planes like that a disaster. I don't think, even though I welcome the experimentation, I don't think it changes anything. Hydrogen at the bottom of the market, that sort of ATR-8 class, again, I welcome experimentation. The smartest minds in the industry who I listen to on hydrogen say the bigger planes, it's a complete disaster. You just don't get there. Alan Epstein over at MIT has some fascinating comments on that subject. But for the smaller planes, where maybe it matters a little less that you take a chunk out of range and payload to make way for hydrogen equipment, who knows? Maybe there's something possible there, but I'm not super optimistic. About the only path that I feel halfway confident in terms of getting to net zero is SAF, sustainable aviation fuel. There's a lot of very interesting experimentation. There, it's a question of scale. Can you scale up? Can you scale up with fuel sources that really don't, they're not ethanol. Ethanol was, kind of ridiculous. Can you actually get to fuel that doesn't cost more to make than it does are you not doing more damage than with traditional hydrocarbons? We'll see, but it's about the only hope we've got, because for bigger jets with hydrogen, you never get there. With electric, you never get there. SAF, you might get there. So let's keep our fingers crossed and hope for the best with SAF.
Sort of staying with Amy's theme there, and there's some other questions about this too. You talked about the technology and your questions about that, maybe on hydroelectric and all the rest of it. Let's talk about the politics of it a little bit. I remember when I was in the airport business, talking to my European colleagues about permission to grow. At the end, these are all political questions, but especially when you get into the environmental realm, they're very political. And the people you're talking to around the world, where are you seeing, the biggest risks to growth that maybe, 10 years ago, we might have thought a particular market was going to be really good, but maybe like Europe was 20 years ago, where pastors were giving sermons against flying, saying it was immoral and so forth. Where do you see the problems there, and are there any bright spots on the political side? Trying to expand aviation without having to worry about that.
Yeah, that's right. You were in the canary in the coal mine in it all, weren't you, with the airport business? My gosh, that's the mother lode of NIMBYism and whatever else. But I got to tell you, 2 years ago when the whole Greta Thunberg thing began, and this, I was kind of dismissive, and now I don't know. It wasn't showing up in the data. You had 10,000 people in Scandinavia saying they wouldn't fly and signing all kinds of things, but nobody in Asia, Middle East, Latin America, or North America really cared very much. And Southern Europe, it didn't seem that way, or even Central Europe didn't seem that way either. But just anecdotally, you talk to young people, there does appear to a bit of a mindset shift, and I think we have to be mindful of this. My argument is that we're doing ourselves a bit of a disservice from the standpoint of arguing for zero G emissions. We need to be presenting, I think, just sort of a holistic message of eco-friendliness, everything, whether it's, how aircraft are built, how aircraft are taken apart at the end of their lives. We have to broaden the conversation beyond burning fuel and say, this is what we're doing to reduce our footprint, because I think that might resonate with people, especially young people. And again, I'm just not super optimistic that in the next 20 years, we're going to get anywhere in terms of emissions reductions from jet engines or anything needed to power the bigger aircraft. So we need to sort of broaden that message. Does it do the job? I don't know. I mean, you talk to young people, particularly in Europe, but also in North America, they do appear to be thinking a bit different. I'm concerned about that, because it's going to be a long time before it actually shows up in the data if it's really hitting 15-year-olds. But by the time they're 25, you didn't notice it happened, but all of a sudden they're taking their Priuses for vacations instead of flying somewhere, right?
Yeah.
So I think we just got to be mindful about the message we send. But other than that, all we can do is hope for the best.
We do have a more positive message than we sometimes give ourselves credit for. I agree.
Well, I also think we have to challenge kids in young grades, like throughout K through 12. We need to challenge kids to come up with the answers. We need to throw these problems to them, and instead of telling us what the grown-ups are doing wrong, let them come up with creative solutions, because you never know, something might stick. Anyway, along the lines of David Newell's question, Richard, on slide 14, you said that commercial aviation will be last in line to hire workers. Clearly, the aviation industry already has a pretty significant workforce issue. Can you expand on the disaster that is right now, workforce shortages, and how commercial air, in light of what you said on slide 14, what's our outlook like? And Greg, if you don't finish us off with some good news, then I'm never doing another webinar with you again.
Yeah, indeed. We could all use a bit of good news after this, because it is a challenge. David's question is, well, thank you, David, for the question. I mean, you look at the three areas of concern in inflation. One, of course, is labor. The other is energy, and the other one is materials. Materials, that's a long-term concern. That materials prices have a way of taking care of themselves. History shows that. Ditto for energy. The only thing that appears to be structural is labor. And whether it's pilots, machinists, engineers, whatever bucket, there are inflationary trends. And the dynamic that I think concerns me most is the civil military one, not just because defense spending is so high right now, and obviously that's a major source of demand for workers, but it's also important to remember that defense contracts tend to be cost plus. In other words, on the defense side of the house, you hire someone, you get that incremental cost reimbursed. Most of the time, not always, but most of the time. That is simply not true on the jetliner side of the house. And my favorite historical example of that, in 1967, there were two companies, McDonnell and Douglas. One built F-4 Phantom jets, and we're building them at an all-time record pace of about 72 per month or something ridiculous like that. The other built jetliners, and McDonnell effectively said to Douglas, well, we're raising our wages 5%. The Pentagon will pay, you not so much. Here are the terms for our merger. I suggest you sign. In other words, the balance of power and economics gets heavily shifted towards the defense side of the industry, and I'm concerned about that happening here. So what's going to happen? Well, a lot depends upon the broader economy. If we see things cool down a bit in 12 to 18 months, I'll worry less. But right now, I'm pretty darn worried. I'm very concerned about the incremental price needed to afford the production ramp, the capabilities, the engineering and design capabilities to create the new next generation of civil products and whatever else. I think it's, in terms of medium and long term, probably the biggest single concern I've got.
I guess Amy put some pressure on me to try to finish this off on a positive note. And so I guess the positive note I want to ask about, and you know, the way I see it, you can tell me, hopefully you'll tell me that this is right, but maybe you'll tell me it's wrong. You know, things are tough right now in the financial markets and so forth for all kinds of, you know, various reasons. And you're right, the fundamentals of the overall global national economy are pretty good. But I remember a lot of political candidates losing their elections because they said the fundamentals were pretty good when people didn't feel it. You know, looking at where we are now, to me, it seems like there might be a little further down to go. But the next year or two, obviously the next couple of weeks in Ukraine will tell a big story. And so let's just say that we have a good resolution of that. You know, I think you could see in another year or two, you know, the markets, you're really much higher. Leisure traffic has led the airline, you know, the airline industry so far, but they need people in the front of the plane paying fuller fares. I think that's going to happen in 2020 by the end of next year anyway. So maybe not in time for your presentation next year, but maybe the year after. But tell me I'm right. Tell me that by the time I got white hair, by the time I retire, things are going to be awesome this time next year and toward the end of next year.
Yeah, I'll give you an upside scenario that I think is a respectable baseline and hugely optimistic, which is that, you know, frankly, the Putin government gets a bit of a bloody nose economically and maybe even militarily. And they say, all right, let's talk. The situation gets resolved. There's an upside for defense because everyone is reminded that, you know, well, it's important to be prepared. There's an upside for commercial because, frankly, a cooling off of all of this, followed by perhaps a realization by Russia and China that it's not such a great thing to be in an adversarial relationship with the rest of the world, results in, well, resurgent globalization and open borders. If not totally open, then at least a willingness to reopen them close to what they had been. And of course, in the midst of all of this, it might be, well, that we've got this pandemic thing licked. You add all of these very reasonable assumptions up and you've got a recipe for a fantastic market comeback. So Greg, I appreciate you teeing me up with that. And I agree completely. That is a very positive and frankly, a good baseline note to end on.
I think your comment about the pandemic wrapping itself up or whatever you want to look at least people, you know, figuring out how to live with it and the variants getting, you know, less lethal and so forth is something I hadn't folded into my question. But yeah, I think we're headed toward a better time and I appreciate your saying that. I appreciate your entire overview during this last hour. As usual, informative, entertaining. There have been some questions about people getting a copy of the presentation and hopefully, Richard, as we've done before, that you'll be okay with that.
With pleasure.
Yeah. And
we need to make climbing out of the pit t-shirts for everyone.
Yeah, let's do that.
Mhm.
Yeah, absolutely. And then maybe
Mhm.
we'll
I
do
like
it again
that.
this year. It'll be we climbed out of the pit, right, Amy?
You made it.
We're out. So before wrapping up, I want to again express our appreciation to our sponsors. Aerojet Rocketdyne, Boeing, Flight Safety International, the National Air Traffic Controllers Association, Raytheon Technologies, and Safran USA. And thanks again, Richard, for the presentation and discussion. You're always interesting, always entertaining. I still have some of my beer left, so I'll enjoy that afterwards as I think about what you said.
Where's my beer?
What's that?
Where's my beer? Turn it.
We'll send one over to you.
Okay.
So all of you who are on here will get a recording of the presentation and also invitations to future webinars. And please don't forget to check out, you see there on our screen, our websites. Please join our organizations. You won't regret it. Amy, you want to finish it?
Yeah, we already have a great lineup for future, our webinars this year, including the future of aviation post-COVID, inspiring the next generation of aviation leaders, which will have a lot to do with education, expanding aviation talent pool. I'm hoping to get some of my fellow members of the FAA Women in Aviation Advisory Board on a webinar so we can talk about a report. Developing a more sustainable aviation industry, because everyone loves to talk about it. I would love to hear more from Richard actually on that, and the future of space travel. And who knows, we may even add more. Each webinar will feature several leaders in the aviation industry with compelling interactive discussions, just like Richard gave us today. Thank you very much.
Thanks,
Thank you all.
Thanks, everyone.
Slava Ukraini.
Yeah.
Yep. Bye-bye.